Hi everyone, my name is Josh.
And I'm Jenny.
And today we're going to have a discussion just around GST and when it applies to when you sell your property. There's a lot of scenarios where this may happen, but there's like some common topics that we're going to discuss on because this is quite a lengthy topic. For our discussion for today, we're mainly going to focus on the margin scheme and also the GST concession when selling a property under a going concern. Like I said before, this is quite an extensive topic, so we will only be able to cover this in about 5 minutes or so we could go on for hours and hours. Highly encourage, if you got any questions from our discussion or anything like that, get in contact with us, and we've got plenty of capable employees to answer your questions. So to get stuck into this, we've got to probably understand when GST applies to a property. When we talk about this, we need to understand when GST applies basically when a supply is made of a property and the seller is registered for GST. To break this down even further, what is property? Property is land and buildings, and it also can be an interest in land. So it doesn't have to just be a physical asset, it can be an interest in an actual land and having rights in some sort of land. And then to break down a supply, what would you say a supply could be?
So supply can be a few things. It doesn't necessarily mean just selling a property. It could also be a lease or a transfer of duty as well.
Yeah, so like it's probably, you don't get caught up in that sense, like only just thinking about when I sell the land.
Yeah.
It could also be a lease when you're renting to someone.
Yeah.
So you've got to take in those considerations as well. Generally speaking, GST doesn't apply to your family home, so anything that's private, we sort of ignore GST in that sense. But if you are a property developer, for instance, and you're selling a property and you intend to make a profit, you may need to consider GST when you are selling your property and maybe have to remit to the ATO. Generally, when you sell out your property and you generate a GST liability, it can be quite large, so that can catch people off. A way to manage that is through the margin scheme. So the margin scheme is just a way of working out your GST liability. It's just the GST on the margin of your sale of the property. So it's basically your sales proceeds less your purchase price. You pay GST on that margin. For instance, if you bought a property for $500,000 and you sold it for $1 million, which is pretty decent, you'd only be paying GST for that gain basically. So that 500, you pay GST on the 500 gain. So that would work out to be $45,000 instead of paying GST on the $1 million, which is the sale price, and that would be 90k. So you're saving quite a lot in GST and it'd be a bit easier on cash flow as well. There is a lot of conditions to be able to use the margin scheme. The few that I'll touch on for now that should be mostly important is you need to sell a property that's taxable. You need to have a written agreement with the purchaser. You need to be registered for GST or required to be registered for GST. And the previous owner that you bought it from, if they weren't eligible to use the margin scheme, you generally won't be. Like I said in the beginning of this video, there is a lot of other conditions that you need to be using for this GST and margin scheme. However, we don't have the time. We've only got 5 minutes. I would highly recommend you come and contact one of us if you have this potential problem and you want to reduce, for instance, your liability. It's very helpful, and yeah, there's definitely ways that we can work with you. Jenny will now touch on some topics on the GST concession on selling a property under a going concern.
Yeah, cool. Thanks, Josh. Basically, you are selling property under a going concern if the sale includes everything that's necessary for continued operation of business. So usually when we say selling of a going concern, it's got to do with selling a business or a part of a business to another person. This also includes, as I mentioned, the business properties. So when you sold businesses with assets and operating structure of the business, fully tenanted building is one of those as well, where property and all leases are included in the sale, and partially tenanted buildings where the vacant part of is actively marketed for lease or undergoing repairs and refurbishment, and all leases are also included in the sales. So some of the GST consequences of this is generally it's GST free if all of the following apply. So if payment is for the sale, the purchaser is registered or required to be registered for GST, and the purchaser or seller have agreed in writing that the sale is of going concern. If the property is part of GST free sale of going concern, you are not liable for GST on the sale, and you and the purchaser may be able to claim some GST credits on expenses such as legal fees relating to the sale of the property.
So I guess that's important. When you think of that concession, you're not thinking, okay, I don't have to worry about GST at all.
Yeah.
You probably can capitalise and actually claim GST credits for, or GST, some sort of GST for the expenses around the purchase. So even though the whole GST transaction is free, you can probably consider claiming those credits. So don't think, now that I've got GST concession, I have to ignore it.
Yes,
you still can benefit in some way. So yeah, be cautious of that, I would probably say.
Something to think about.
Yeah, definitely, for sure. Yeah, that's pretty much what we wanted to touch on. Yeah, like I said in the beginning again, it is a quite extensive topic. Please, if you've got any questions or if you've got an issue that you could potentially face with GST and property, I highly recommend getting in contact with us, and yeah, we'd be happy to help. Thanks very much.
Thank you.
Cheers.